A recent Associated Press poll found that 15% of Americans report being worse off after more than a year of the pandemic. It also found that most of those people were living below the federal poverty line before the pandemic began. On the other hand, 61% of those living far above the poverty line were able to generate savings during the pandemic. For more on this, I want to bring in Joseph Minarik. He is a senior vice president and director of research at the Committee for Economic Development, and he was also the chief economist for the Office of Management and Budget during the Clinton administration. Joe, good to have you back on the show. So 29% of Americans living below the poverty line say they became worse off financially during the pandemic, but 34% of Americans living above the poverty line, twice above the poverty line, say that they are in fact better off. Explain to us why the pandemic had such a negative financial impact on those living in poverty while seeming to have a positive effect on some of the wealthiest Americans.
For the first time in 100 years, we had a pandemic in this country such that people feared or were ordered not to gather. You have to go back to the years at the end of World War I to see anything similar. So what that meant was that people who worked in hand-to-hand service delivery, restaurants, retail stores, travel, hospitality, generally these are people working at comparatively low wages. They're people with limited transferable skills. Suddenly found that they lost their jobs or had significant cutbacks in their hours. As a result of that, you have people who were already low on the wage scale who all of a sudden had far less than they did before. The federal government responded to...
I think a lot of people know from their own experiences in their own communities how that impacted many of the people who are already struggling to make it in America. I think what's really challenging for people to understand, which I'm hoping you can dig in a bit more on, is this idea, though, that people during the pandemic at the higher income brackets actually were doing well during the pandemic, as opposed to some shared suffering that we all had financially.
It's a combination of effects on earned income, on wages, and also on income from property. If you were in a skilled profession such that you could work remotely, you kept your job, you continued to earn the income that you had, so you're doing at least as well. For many people in that class, in that income bracket, some of the things on which you might have spent some of your income were no longer available to you. You're not going out to dinner because of the dangers there. You're not traveling. So people therefore had money that they used to spend on those kinds of activities that they couldn't spend, so they had more cash lying around. Then you look at the effect in financial markets where the Federal Reserve reduced interest rates. People were looking for higher returns in their investments, so they bought stocks. The stock market rose, and as a result of that, the people with the most wealth, who tend to own the most equity shares, had an increase in their wealth.
And how did stimulus checks factor into all of this? How effective have the checks been in improving the financial situation for those living at or below the poverty line?
The distribution of stimulus checks was limited to people below the median, generally below the median income. Above the median income, the amounts of stimulus checks phased down fairly rapidly. So if you if you were in the lower half of the U.S. income scale, you got a full check. Probably more important to the people who are most badly hit, including people who lost their jobs, was the big increase in unemployment compensation. If you are a median wage earner in the United States and you were able to hang on to your job, you continue to do relatively well. It's the people who suffered unemployment who really were hurt the most. The substantial increases in unemployment benefits helped that, but it's no substitute for a wage and the security you get from being able to support yourself.
And Joe, one last question for you, because there's also a concerning racial dynamic about this, because the Associated Press poll found that far less Black and Hispanic Americans have been able to save during the pandemic compared to white Americans. And for families whose finances became worse off during the pandemic, who were already struggling to begin with, how long might it take for them to get back on their feet?
We're going to see, we're already seeing the beginnings of an economic recovery. As a matter of fact, we will probably reach the level of the gross domestic product that we had somewhere in this second quarter of this year. However, for those who lost their jobs, and again, this is typically people below the poverty line, people at relatively low wages, and these are disproportionately people of color. In terms of employees, it's disproportionately women. Those people are behind the eight ball. They are looking to get back to work, but because of the continuing concerns about public health, it will probably be the case that many of the jobs that were lost in dining, in hospitality, and so forth, will not come back, not immediately, possibly not for a significant period of time. We're going to need either to get those segments of the economy up and running again, which is going to be difficult if people are concerned about their health, or we are going to have to reach out to those people and train them with new skills so that they can find jobs in new lines of work. In either case, that's going to be difficult to do. This pandemic has been vicious, both with people's health and with the health of our economy. A lot of businesses have had to close their doors.
Important to remember that. Joe Minarik, thank you.